What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So you guys gave me two high-yield dividend stocks to review. And again, this is not financial advice for entertainment purposes, only disclaimer in the description. I'm going to do a review on them, and you tell me if they're worth it or not. That's one of them's very interesting, and another one might be a buy. I'll just go over stock analysis and dividend stock analysis with these stocks. So if you're new to this channel, you got to subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check these stocks out right now. So the first dividend stock is SLR Investment Corp. It's sitting at $16.89. It has a dividend yield of 9.71%. PE ratio of 11.98. Market cap is 925.11 US dollars. Its year range was 1657 to 2005. Its day range was 1657 to 1699, and its previous close was 1675. So it really hasn't jumped up in price per share. So that's one thing to look at with this business development company. Let's look at these guys a little bit, and then you guys decide at the end what you guys think of this stock and the other stock. So SLRC is a symbol, a yield-oriented business development company that invests directly and indirectly in senior secured loans in private middle market companies to generate current income that is distributed to shareholders monthly. We collaborate with the U.S. middle market businesses across a diversity of industries to deliver customized debt financing solutions. So on April 1st, 2022, SLR acquired its affiliate BDC Senior Investment Corp. The combined company continues to trade under SLR Investment Corp's existing NASDAQ symbol, SLRC. SLR Investment became a listed BDC in the first quarter of 2010 and is an investment grade rated by Moody's and Fitch. So let's see how they're doing with their investment strategy. Okay, so revenue-wise, this is in millions of US dollars. 115.56, 2016 151, 2017 143, 2018 153, 2019 154, 2020 121.74, and then 2021 139. So there is an increase in 2015 to 2021, which is good. You can blame the pandemic right here. There was an increase from 2018 and 2019, which is attractive. So with these loans that they have, how are they doing as a dividend stock? That's one thing we need to look at with these guys. If they're a monthly dividend payer, how are they doing? So one thing you need to be aware of, a lot of these companies, they'll be a quarterly stock. And then when things aren't really well, they all of a sudden say we're going to be a monthly dividend stock. You know, they're not. This is not a Agree Realty Corporation where the income is consistently going up when they were a real estate investment trust that distributed quarterly dividends. These guys are a business development company that decided to distribute monthly dividends. And sometimes you have to be careful with that when they convert from quarterly to monthly, because they're trying to attract investors, and it could be a yield trap. Look at this. 2010, it was 34 cents. 2010 and 2011 to 2013, it was 60 cents. So there's no increase in the quarterly dividend. And there was a decrease in 2013 at 40 cents. And it stayed at 40 cents to 2017. Then 2018, it hit 41 cents. And then all of a sudden, they're at 13 cents. So we need to be careful with these guys. Okay? It's taking forever for them to increase their quarterly dividend, okay, from 40 cents to 41 cents. You're waiting an awful long time. Now, it is sitting at 1681, and there's not that many good-looking and attractive monthly dividend stocks that are business development companies. This is not a bad one, okay? Would I buy it right now? Probably not, because look at this right here. It's just, I would carefully study it before I jump the gun and see how the dividend trends are going as a monthly dividend stock, because they converted to a monthly dividend stock. So then you need to start studying the trends. And again, their price per share hasn't gone up. And, you know, you look at Main Street Capital, Main Street Capital looks like a better monthly dividend business development company versus these guys. And I have posted videos on Main Street Capital, so check those out in my on my channel. But these guys, they do loans, and you can get hot and cold. So just be aware of that. This is one that I'm probably going to watch. If I start seeing increase in revenue and dividend hikes, I'm in. But if I don't, so be it, because I'm not seeing any hikes yet, and I don't see an increase in price per share. Something just doesn't seem right, and that's why I'm going to tread water and just be very careful with these guys. It's like how would I want to say this? You're walking on ice, okay, on a lake. Just really careful. You don't want to do anything stupid because you'll just fall in the water, break the ice. But if you're careful and closely observe the surroundings, you may be okay. That's the best way to say it. It's just, I would never walk on a frozen lake to begin with. And I just, that's my analogy. It's just, I would be very careful. I would be cautious. I'm not feeling it, really. But I'd watch it. I'd definitely watch it. My interest is not very high in these guys. But if something does happen, or there's an increase in revenue or dividend hikes, absolutely, my interest is going to be there. I mean, Prospect Capital has an increase or dividend. These guys at least have some potential with dividend hikes. So let's jump to the next dividend stock. So this is VOC Energy Trust. VOC is a symbol. So already looking since inception, since 2010, 2011, it was $22.60, and it's down to $7.85, and it has a dividend yield of 14.34%. Market cap is 133.45 million US dollars. The beta is 1.62. The PE ratio is 15.39. The EPS is 0.51. So what are these guys about? And here's a range, 52-week range, 333 to 818. The day range is 773 to 795. So there's some things that need to be looked at, and we're going to go over that. So right here, there's a decrease in total revenue from here to, this is just, I'm seeing a decrease. Even before the pandemic hit, you're seeing this, 12,939, 12,262. Now this is in thousands of dollars. But what are these guys about? We need to look a little bit into them too, because these sometimes can be yield traps. We need to understand what's inside of these guys. So here's our website, and they're not very transparent. This is what is an issue. So it's hard to look up information. Like, who are these guys and what do they do? So that's one thing that kind of raised an issue. We need to look a little bit more. There's already a problem. I'm on their website and I'm trying to figure out what are these guys about, and I had to go to Motley Fool to look at things up about these guys. The VOC Energy Trust was formed in November by VOC sponsor, a privately held limited partnership in the production and development of oil and natural gas from properties in Kansas and Texas. There's a few more things that kind of quirk me about these guys. And I feel a little, I don't know, so I'll show you a few other things. So here's one thing on Seeking Alpha. VOC is able to pay its owners an impressive 10.37% yield. This is on March 31st, based on the profits from its producing properties in Texas and Kansas. The trust has a limited life, and investors will not likely have any significant remaining value after the end of 2030. So right there, I don't like the yield trap. I think it's a yield trap. It's going to be gone in 2030. I like dividend stocks that stay forever. buy and hold forever stocks. These guys are not a buy and hold forever stock. So that's one thing that quirks me and irks me and you know. But I will go over their dividend history. This is one thing that's somewhat attractive with these guys. So here's some good things and bad things. 2013, it was sky high. You can tell it's kind of a scatter bomb. 41, 53, then it hit 10 cents. That's a problem. Looks like a yield trap. 16 cents, then 11 cents in 2015. It just doesn't look too hot. 5 cents, then 9 cents, then 8 cents, then 9 cents, 20 cents, 25, 28 cents, 16 cents, 12 cents, 3 cents. You just don't know what you get. And I don't like the inconsistent pattern of VOC and its dividend history. And plus in 2030, it's gone. Adios. TKO. Historical. If you remember watching Good Burger, that's the Mondo Burger guy saying that. That's what I was thinking in my thought process. You know, all these red flags, and I don't want to touch this with a 10-foot pole. That's the best way to say it. The previous stock, SLRC, there's potential in that one. But again, it's like walking on a frozen lake. You got to be really careful. You're going to fall right in that lake. It's going to crack and you're going to fall. So you have to be extra careful with that one. This one, you just stay away. It's like, I don't know how to describe it. It's, how would I say this? Like that yield trap I referred to with, you know, that toxic female that, you know, was coming after me. You got to stay away from things like that. Just stay away, period. I mean, it'll suck your energy out. It's just not healthy. It's not good. You don't get any value. You want stocks of value. Your investment and time need to be of things of value and growth, not going down, not going downhill, not making you miserable. So that's the way I refer to yield traps. They just like toxic people and that you just want to get rid of. Just crumble them up in a piece of paper and just toss them. This just doesn't look good. It's just not good. So that's the best way to describe this one. So let me know what you think of this video. If you are new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I will post a video on Saturday. I know YouTube has been a pain in the butt with loading up things. So I'm just giving you a heads up. I will make an announcement in the comment section, in the community section, if there are issues with YouTube. You guys take care and have a good one.